Welcome back, and joining us now is Capstick from Nedbank Private Wealth for a look at what's played out on the market scene. Brendan, thank you so much for your time today. And let's start with those U.S. job non-farm pay, the U.S. non-farm payrolls. I don't know, are they surprising to the upside? Are they surprising to the downside? Is it good news for markets? Is it not so good news for markets? The labor market, they adding 130,000 jobs last month, and unemployment dipped to 4.3%. This print really defying those expectations. Does this allude to a resilient labor market, one that is more resilient than markets would have thought?
Good afternoon. Thanks for having me. Like you mentioned, I mean, that 130,000 number really surprised on the upside, nearly double the expectations. But if you just look at the market reaction, initial market US futures were strong, and the market has actually reversed quite a bit on the tech-heavy side, and Nasdaq, as you mentioned, down. So interesting to see this. I think what this means, you've seen yields go up in the US, and that means that interest rates most likely are not going to come down as aggressively as expected with a stronger labor market, possibly in the second half of this year, or even not at all. We'll wait and see and be data dependent. But at this point, we definitely see investors taking a risk-off approach, specifically with highly valued tech names.
That was going to be my next question around how you're interpreting this print when it comes to future monetary policy moves. You mentioned there that it seems like a risk-off sort of mood today. I was looking at what gold was doing as well. Initially, we saw gold heading close to that 5,100 mark, and then slightly retreating back to, 5,064, 5,065. Does this speak to investors changing their bets when it comes to monetary policy?
Yeah, it's a lot of volatility at the moment. I mean, it's gold maintaining its level above that 5,000 level. Post the retail sales, softer retail sales in the US yesterday, I think that gold moved higher. But on the back of this, possible rates being sticky, that could mean some softness in the gold. On the other side, we've also seen some increased tensions in the Middle East.
Yes.
The oil price also increasing nearly 2.5%, above $70 per barrel. We saw Sasol closing up 5.5% on the back of this as tensions increase between Iran and President Trump in the US. So that also, does play a role in this current gold price.
So volatility really remaining the name of the game. Then let's talk about a currency that's known to be volatile, right? The local units, proving us wrong over the past few months, though, and holding on to gains even today. Yes, benefiting from a softer dollar, but I'm wondering whether you're pricing in any risk when it comes to the State of the Nation address that's being delivered tomorrow.
Yeah, I think the dollar's been weak. We all know this, but I think against the other crosses, our rand has been strong on the fixed income buys and foreign buys on our bonds, and there has been increased buys on foreign buys on our banks as well. So I think on that front, we've seen some appetite coming into our commodities markets. We saw another strong day for gold and platinum shares, and that does help the local unit. I think just speaking to Sona tomorrow, I don't think it's a risk event. I think it's more opportunity than anything.
Okay.
I think we've got strong local momentum building in South African markets. I think there's definitely stuff that's positive on the credit side, or credit rating side. So I think we should be seeing it more as an opportunity to position ourselves on the back of a global spotlight, playing out in the mining indaba as well this week. So I think more positive tailwinds building locally. On that front, yes.
And sticking with news out of the mining sector, not necessarily out of mining indaba, but we did get a trading update from Pan-African Resources, expecting earnings to rise fivefold, of course benefiting from higher gold prices as well as improving production, I think up 51%. Just your analysis of that update, I guess expected considering where that yellow metal price is.
Yeah, gold shining brightly, and the gold shares are shining brightly, of course. I mean, we saw in the back of DRD Goldfields as well as Pan-Africa now, really eye-watering numbers. If you look at those EPS numbers expected north of 500 and 570%. I think on the back of that, we've seen this, which is positive on that front, is that you've seen increased volumes, which is, benefiting from these prices. But I think on that, you just need to be aware, a lot of these shares are up very strongly. I mean, just an example, Pan-African's up nearly 250% over the last year. So just be wary, and I'll be dancing close to the door on many of these names.
And quickly, before we get into your stock pick, have you had a look at Capstick's update? They're expecting earnings growth of up to 25%, pointing to, of course, solid client growth, higher transaction volumes, and increased lending activity. I would have expected or thought that the share price would be trading higher.
Yeah, I think it has had a great run so far. I mean, all banks have been really strong over the last year or so. It is a trading statement, so they've guided that 20 to 25% EPS number, which is positive. On that front, they've highlighted, as you highlighted in the previous segment, quality loan book growth, and broadening into business loans as well. Capstick Connect is also a growing area for them. So really a solid business, massive business with nearly 25 million customers. I think where it's sticking, from a price movement point of view, it's its underlying valuation. It's currently trading at a price to book of 7, just north of 7. Historically, that is not cheap. Quality company, but I think that probably delivers market expectations are quite high on Capstick at these levels.
All right, let's get your stock pick then. Where are you seeing value at the moment?
Yeah, my stock pick today is Shoprite, local retailer, food retail. It hasn't moved at all over the last year, nearly flat to marginally down over the last 12 months. Quality operator, trading at a 16 times forward P multiple, 3% dividend yield. Really South African quality name on that front, and I think they've been stealing market share even in this disinflation, for food disinflation environment. So on that side, you're picking up a quality SA Inc. name at an attractive valuation. This is for local investors, and international investors will also look at this name for SA Inc. entry point as local tailwinds build, as I mentioned, on the GDP and possible interest rates being cut further this year.
Let's leave it there. Brendan, thank you so much for your time and taking us through trade this evening. That was Brendan Capstick from Nedbank Private Wealth.